indicate the euro dollar, and the euro dollar is, for starters, very very good at respecting significant levels, of which we have a number in and around the price action we've been trading the last week or so. The 136.66 indicated by this purple line here is proving to be quite a level in holding the bottom of this euro dollar for now. The 138.36, which is this low, this significant point here, going back to the summer. This has been the point from which we got the rally, this relief rally after the euro news. 2 days later, we're straight back to the level at 138.36, and this week, for the balance of the week, it's pretty much been held the highs. The 136.66 has held the low, the 138.36 for most of the week. This week has held the upside of the euro dollar. Now, I'm going to suggest, I mean, it's not strictly a structural long, but for all intents and purposes, we're sort of having a matching congestion this side of the move out to the highs, and a break of this area is going to give us a good enough entry to take. So the 138.36 or the daily highs above that level are going to suffice for our structural long. So for the structural long point on this euro dollar, I'm going to have the 138.36. The structural short is going to have to be the 136.66. Yes, I know we've overshot the level a couple of times beginning of the week, but the 136.66 is the level below which you want to be looking to the short side, if that means taking a little bit more prudent entry in the low made at 136 on Tuesday, then that's absolutely fine. To be more, you're just basically being slightly more conservative. But the 136.66 is the significant level, and that goes back to get a weekly up for you. Goes back to this high here, which is made at the end of 04 going into 05, and it's proved the level going all the way through. Okay, that level from 05, we can see the daily over the last 3 weeks or so, the market's held very well and respected the level around that. So structural short is 136.66. Now, going to the daily then, the euro dollar has performed immaculately around such levels. The 137.37 is a significant level. You can see where we are now. We're just holding right at that point. The reason for that is A, it's a significant level on the daily, and B, it's been respected. You see this sell-off Thursday's US session we held, then we held once, twice, 3, 4, 5, 6 times and rallied from the 137.37. We then went to hold the euro dollar basically in consolidation between the 137.96 and the 138.36. Okay, today, Friday, as we are on Friday afternoon now, we traded down from the 137.96 and we are now holding yet again at the 137.37. So what we're going to do, you can see we've now started consolidating. You see we've now started consolidating around the level, the 137.37. When we have a period of consolidation here, we want to be making entries at the peripheries of the price action around this point. In this case, and I'll put a red line to indicate the short point. Okay, this is taking into account the fact that we're below 137.37 and we're below some price action that takes that level into account, and is just a more prudent, safer entry point. So the short point in the euro dollar based on the 200 tick is going to be 137. 137.10. I can take this level out, that's an old figure. And the long is going to be the significant level of 137.96. Both these levels, incidentally, are generated from the daily chart as well, and they've just been respected properly on the 200 tick chart. So the euro dollar, more than anything actually I can think of right now, has respected the levels the most. Okay, a short trade at the 137.10 would mean your stop would have to be, your short stop would have to be 137.37, and going long at the 137.96 incidentally the long point at 137.96, if you wanted to wait further, if you want to be more, that you've got two options here. The more aggressive long is 137.96, the more conservative long is 138.36. You've got both, you've got two significant levels to use. Your stop in either case is basically the other side. When I say the other side, you want to accommodate, it's not exactly the level, you want to accommodate 5 or 10 pips either side. So the long at 137.96, assuming you're going to take the more aggressive approach, your stop wants to be say 137.85. Your long stop is 137.85. When I give you these stop levels, obviously, once the market is up and running and it's live and you're in, those stops are going to change according to your opening range, or your risk, or any other chart pattern that is evolving at the time of trading. And all you guys that have done a course and are familiar with the rules of price behavior, you should know where your stop's going relative to the market side and the opening range, etc. Okay, So the short stop 137.37, the long stop 137.85. Okay.